opportunity to moderate this panel. And I have a great guest with us today. It's Joe Philipsz. He's, I think, based in London right now, or he's in contact with us in London. We'll talk about 3Cs. We'll talk about Amber Infrastructure as one of the key drivers of the initiative, what's going to happen or what has been happening in the last year or so, what are the plans for this year and next year, and how governments and private and public projects can work with the 3Cs initiative, which is something really unique and really special for this region spanning from the Baltic Sea down to the Adriatic. So we have about 30 minutes. It's not a lot of time, but I'm sure Joe will make a great presentation. So we will concentrate on the presentation maybe for about 10, 15, maximum 20 minutes, Joe, and then we can have a short discussion or Q&A and do some talking. So just before we start, of course, I would like to introduce Joe. Joe has over 30 years of experience in the infrastructure sector, including significant involvement in some of Europe's largest infrastructure investments. He has significant experience both in making greenfield and brownfield investments and the subsequent asset management of these assets. His experience includes debt financing, restructuring, and corporate turnarounds for both unlisted and listed companies. So Joe, please take your time. Give us a brief on what's happening and how you work with the 3Cs initiative and what's the role of Amber Infrastructure.
Natko, thank you very much for the introduction, and thank you to the organizers of the North American CEE Summit for inviting me to speak to you today about the 3Cs Initiative Investment Fund. So we'll ignore the disclaimer and we'll move on to talk first of all about myself and Amber. So as Natko said, my name is Joe Philipsz. I am part of the investment team at Amber Infrastructure Group. We were appointed as investment advisors to the 3Cs Initiative Investment Fund in February 2020. So the fund's objective is to make a commercial return from equity investments in infrastructure projects in the region within three sectors: energy, transport, and digital infrastructure. These investments are either greenfield or existing assets that require significant capital expenditure. In every case, they will bring benefits to the 3Cs region. That may be through improved connectivity, narrowing the infrastructure gap with the rest of the EU, delivering energy transition, or ensuring energy security. The fund makes investments in the EU member states that are part of the 3Cs initiative. And I like to think of the fund as politically inspired but commercially driven. The fund size is currently just under €1 billion, and we have a target of 3 to 5 billion within and a 5-year window in which to invest that capital. As investment advisor, the role of Amber is to find potential investments, determine which to progress with, and then to manage those investments once made. We have about 150 infrastructure professionals in 11 offices around the world, and as part of our commitment to the 3Cs, we have opened offices in Warsaw, Prague, and Vienna. Amber manages 7 infrastructure funds with a track record dating back prior to 2006, when we launched what is today a €3 billion plus global fund, which is listed on the London Stock Exchange. In addition to that first fund, we manage a number of specialized funds focused in sectors including energy efficiency and digital infrastructure. We have originated and managed over 150 investments over our long history, and a third of those have been greenfield opportunities, which is one of our particular specialties. We have, over the last 18 months, created a specialized team in the region, which is supported by the wider Amber Infrastructure Group. And I'll show you a little bit of the team. So we have created, at the top here, you can see the team that is the regional team. And we are supported by our colleagues in our other offices, mainly London and Munich, for this fund, and they have a number of particular regional and geographical specialties as well as sector specialties. So, for example, we have a digital infrastructure team which manages the UK National Digital Infrastructure Fund. And when we have investments in the region, we combine our regional teams and our sector teams to bring to bear the best expertise possible for the benefit of the 3Cs region and the 3Cs fund. So why is there a need for this fund? I think that's one of the questions we often get asked. Well, there is a very significant infrastructure gap between the Three Seas region and the rest of the EU. So one of the recent reports from Spot Data estimates that this is greater than 500 billion euros for the three sectors covered by the fund between now and 2030. I personally think that's an underestimate, and I think that there are other studies which suggest it's greater than €1 trillion. So not only is there a significant infrastructure gap, but there also is a disparity in the availability and cost of private capital, both debt and equity, between the region and the rest of the EU. Notwithstanding any of that, it's quite clear, and you can see on this slide, that investment in the region is attractive, or should be attractive, to investors. So whilst there's also very significant public capital available for infrastructure, both EU and government, the availability of the private capital in this region is much less than in other parts of the EU. And there's no doubt as well that the need for infrastructure investment is greater than the amount of public capital available. Therefore, the importance of the fund is to help increase the total available capital and to eradicate the infrastructure gap that exists. And the fund is important. It's an initiative to begin a process that demonstrates that private capital can deliver infrastructure in the region in a way that is both attractive to investors and cost effective for the people of the region. It's important to recognize that it will not replace public funding, but will become part of the funding solution for new infrastructure. So that is the need for the fund and what we exist. That's why we exist today. So the fund is backed by the regional development banks and countries in the Three Seas initiative. Having been established by BGK in Romania in early 2020, it now has 9 countries in the Three Seas region as investors. It operates on a fully commercial basis with Amber as the exclusive investment advisor, and it has an independent investment committee that makes final investment decisions. And as I said, it now has almost €1 billion of capital with a target to raise over 3 billion. The fund makes investments in 3 sectors. It's an equity fund that seeks a return on each investment in the low to mid-teen range per annum. We typically invest between 50 and 250 million euros in each investment, but as the fund size increases, this should also increase so that we can make larger investments. We have an investment horizon of around 15 years, but the fund may be extended to 20 years. And we're happy to make either a majority controlling investment or a significant minority investment in assets and companies in the region that are developing infrastructure. So what exactly do we invest in? So I'll talk about a little bit about what stage of development we invest in, what we like to see in the sectors. So the fund is a greenfield fund. It is focused on delivering significant capital expenditure in the region to create new modern infrastructure assets. We can do this through greenfield construction projects, or we can acquire existing assets that require significant capital expenditure for modernization or expansion. And whilst we're happy to take the greenfield construction risk, we do not want to take significant single point development risk. So we are looking for assets and companies that have infrastructure that's ready to build or existing infrastructure that we can expand or modernize. And we are an infrastructure fund. We are not a venture capital fund. So we want to see a number of things in place, or a number of things we look at before we make our investment. So we like regulated or contracted revenue streams with high quality counterparties. We like to see that this is a real infrastructure asset with high barriers to entry. We want to be able to forecast cash flows with a relatively high degree of certainty over a long period of time. And we want to be able to see that there's a management team in place that can deliver on a plan. And finally, we want to see that as well as there being strong ESG credentials, particularly in respect of our environmental issues, we also want to see that there's limited sensitivity to economic cycles. And I think that's a core part of what an infrastructure asset is. So as I said, we invest in 3 sectors, transport, energy, and digital. In transport, the focus is on road, rail, rolling stock, ports, and airports. In energy, it's on renewable generation, gas generation, LNG, pipelines, transmission and distribution networks. And in digital, it is fiber networks, telecommunications networks and towers. So in particular, the rollout of 5G and infrastructure that supports that, and data centers. So they are the three sectors. The things we cannot do within those sectors is limited, but within energy, we cannot invest in nuclear and we cannot invest in coal generation. But other than that, we have a broad mandate that covers infrastructure in those sectors. As you can see, there is very significant need for investment in those sectors, with over 290 billion required by 2030 in transport, 88 billion in energy, and 160 billion in digital infrastructure. Give you a flavor, we have seen, since we started just over a year ago, almost 180 investment opportunities, and we've taken 3 of them through to close. So we've made 3 investments. That is an exceptionally large number of investment opportunities, and many of them are still live. And as we meet more and more people in the region and tell them about the fund, the number of opportunities is increasing rapidly. So it is quite clear to us that the demand for infrastructure investment far exceeds the supply of capital. And as I said earlier, that is one of the core reasons for the fund to exist. We're trying to narrow that gap in terms of funding. Let me tell you about the 3 investments we've made today. So we have invested over 400 million to date. The first investment we made was in November 2020 in Cargo Unit. Cargo Unit is the largest lessor of locomotives in Poland. It has a particular specialty in the provision of locomotives for freight, and its asset base provides a solid platform for expanding and modernizing the fleet through the acquisition of modern locomotives, as well as potential international expansion into surrounding 3Cs countries. Backed by the 3Cs fund, Cargo Unit will be an important player in the modernization of the rail infrastructure in the region, improving connectivity and delivering efficient, low-emission locomotives for the freight market. The main reason we acquired this business is it is one of those existing assets that requires modernization as the rail networks are modernized in the region, but also it's a great opportunity for us to expand that fleet throughout the region outside Poland as well, particularly in the provision of multimodal locomotives that can operate cross-border. The second investment we made was in green energy, and I'll come back to that in a second. I'm going to talk about Enery first, which was our third investment made only a few weeks ago. So Enery is a renewable developer. It has a team with an established track record in acquiring and developing solar PV assets. They own 86 megawatts of operating solar PV assets located in the Czech Republic, Slovakia, and Bulgaria, and it's planning to expand its solar PV portfolio through greenfield development, and it has a pipeline in excess of 2 gigawatts. And the fund's role there is to provide the equity capital that will develop a utility-scale generator in the renewable sector in the region. And it'll operate in Bulgaria, Czech Republic, and Slovakia initially, but we intend to expand that with pipeline opportunities in Estonia, Romania, and other countries in the region. So again, a very important investment for our fund. The second investment we made, which is in green energy data centers, which is in the middle of the slide here, I think this is a fantastic example of the fund acting to bring modern digital infrastructure into the region. So we made this investment in December 2020. Greenergy is a data center platform, with the initial investment being the acquisition of a greenfield data center in Tallinn in Estonia, which is due to become operational in Q4 this year. The Tallinn data center will be the largest and most advanced in the Baltics. And the intention we have is to expand through the construction of similar data centers in the broader 3Cs region. And I think digital infrastructure should play a very important role in the continued economic growth of the sector. And I think there is real opportunity, both economically, but also to help reduce the brain drain from the region to the major European cities by ensuring that there's high quality digital infrastructure available for people to work away from the major centers. And I think the pandemic has shown that we all don't need to be office-based all of the time. And I think that this is the fund investing in the future digital infrastructure that will help support the CEE region. And I think I said we've invested over 400 million. But together with the debt investments in these, that obviously we put debt into these projects directly from banks and funds such as the EBRD. The total investment in these three projects is well over 1.2 billion euros when you count the equity and the debt. So as I said, private capital is not a replacement for government and EU funding, but it's complementary. And the example of that I like to use is that if you look at cargo unit in the rail sector, historically, it's definitely been the case that investment in track and signalling tends to be something that government and EU has to do. It's not been particularly successful for the private sector. But once that's done, as well as modernizing the track and the signalling, you need to modernize the locomotives and the rolling stock that operate on it. And I think this is a great example with cargo unit to show that, for example, in Poland, there's a 13 billion rail upgrade underway, and there's another 13 billion over the next 5 years. That'll provide modern track and signalling. And we, as a private sector fund, will provide the modern locomotives that run on that track. So again, very complementary, and it's a good example of public and private capital working together to deliver tangible benefits, both economically and environmentally, as we modernize the fleet. So the question we often get asked, and I promise this is almost my final slide, is if you want to speak to the fund, what should you expect? How should you approach the fund? So the first thing is that the important thing to recognize is that infrastructure assets are complex, and generally a timetable from our first contact to an investment being made is 9 to 15 months. And to be honest, 9 months would be very short. So it's a long and rigorous diligence process. So the first thing is to check that, what is being proposed meets our sector requirements. So it has to be infrastructure, it has to be in energy, transport, or digital sectors. It has to include at least one 3Cs country and must bring broader benefits to the region in some form. So we can look at this quite holistically. So for example, if we invest in renewable energy generation in Romania, it does have broader benefits because it reduces emissions, but also the electricity networks are interconnected. So it both increases the supply of renewable energy, reduces emissions, and provides greater energy security. So there has to be one 3Cs country, and there has to be a broader benefit to the region. We like, as I said earlier, we don't like pure development, but we are very happy to take greenfield construction risk. We want to see that there's a clear revenue model. We want to see that the management team and advisors are in place to deliver the fund, to deliver the plan that you have. And we make equity investments of 50 to 250 million. So, it has to fall within that range. I will say that in some of the smaller economies in the region, we will make smaller investments. So we will do 25 or 30 million, or we will make a 25 to 30 million investment elsewhere where we can see it as being the first step in a series of investments. So we have a little bit of flexibility on the lower end of that. And then what we'd also like to see is that there is a detailed business plan, a financial model, and preferably some third-party validation of the key assumptions and the technical design that's involved. And then we can consider that proposal as Amber and decide whether to progress with it. So the approach should be made by anyone interested to Amber as the fund's exclusive investment advisor. So, and here are the contact details for you. But essentially, this region is attractive to investors, or it should be. There is significant positive GDP growth expected, and the need for new infrastructure is clear. In fact, in areas such as digital infrastructure, I believe that there's a great opportunity to accelerate economic growth. Infrastructure development is a core part of economic growth in the region, and it's important that plans coordinate across that region to deliver the maximum impact from each investment. And the fund working with governments is a critical piece of that puzzle that has the potential to bring significant private capital into the region in a way which is complementary to public funding and is an efficient cost of capital to ensure the ultimate users of the infrastructure have good value for money. I think that's very important. So finally, just to wrap up, I've worked in infrastructure for over 30 years. When I started in the sector, it wasn't yet recognized as an asset class for private investment. Such private investment now plays an increasingly important role in delivering world-class infrastructure in many EU countries. And I see incredible opportunity for government, EU and private capital to work together in the 3Cs region to eradicate the infrastructure gap that exists. I'm very proud to be part of the 3Cs Initiative Investment Fund, and just like to thank everyone for the opportunity to speak today. Thank you.
Thank you very much, Joe. This was really very interesting presentation. There is huge potential, as you say. Maybe we can use the rest of time just to kind of wrap up and discuss a few details that I think are very, very interesting. I've noticed that you, when talking about these three initial investments, you have not explained the ownership structure. Basically, are these private projects or these are government or public projects? Can you give us just a little bit of the understanding what's the ownership structure of these projects, this initial?
Of course. So all three are private sector. So Cargo Unit, the fund owns a controlling stake, a majority stake in Cargo Unit, and we acquired that from another fund. And as I said, the intention behind that is to make significant future investments to modernize that fleet as the rail networks are modernized in the region. Greenergy, again, we have a controlling stake. It is a private project. It was actually introduced to us as a result of a discussion with the Estonian government. So whilst it's a private project, it was introduced to us by Estonia. And then Enery is again a private project, but of course as a renewable business, it has very significant engagement with governments in the region, either through the subsidy arrangements that support renewable energy or as part of the electricity networks in the region. So these are private sector sponsored projects. Mm-hmm. We also have in the pipeline of transactions we have a number of joint ventures with state-owned enterprises as well, but they've not yet been made. Sure.
The investment summit we are currently attending is focused on North American / Central Eastern European markets. How do you see interest from American companies, and how do you see attracting American companies into the region?
So this is before this conference today, I was actually on a call with a very large US-based technology business from the Northwest, and I think it's fair to say that not just technology businesses, but energy sector businesses as well see the CEE as a very interesting area of opportunity, both digital infrastructure as well as particularly energy infrastructure. And we have had a lot of discussions with very major North American corporates who want to invest in the CEE region in one form or another, either as partners with the fund or as customers of infrastructure companies that we're going to back or are backing. I think there's no shortage of interest. I think it's partially driven by the fact these are all EU member states with very significant GDP growth forecast, and I think actually have been arguably more resilient during the pandemic and will recover faster than other parts of the developed world. So I see no shortage of inbound discussions or inbound inquiries from North American businesses who want to be involved in one way or another.
Croatia hosts a small 3Cs investment conference tomorrow. Are you guys planning to have more of such outreach events and conferences and roadshows in the months to come?
The answer to that is absolutely yes. We, in the last few months, we have been at a mini conference for the fund in Sofia. We have been, we've spoken at one tomorrow in Croatia. There is the 3C Summit in Sofia in July. A number of the other countries within the region are planning mini conferences for later in the year. I think it's very important that we spend time both with government and private sector, and these mini conferences are a great way to do that.
What are the expectations from the Bulgarian 3C summit? Are there any specific things that you will be addressing there?
So I think so the 3Cs summit in Bulgaria combines both 3Cs initiative, which is the political initiative for the heads of state, as well as a secondary event, which is focused on the fund and sponsored by the Bulgarian Development Bank. So the 3Cs initiative is political, so I'm not going to comment upon that, but I think the main issues there are both cooperation by the governments within the region and with the EU and the United States, and the second thing is potentially enlarging the 3Cs region. There's been a lot of debate around Greece, for example, but these are all publicly discussed. From the fund's perspective, it's important for us that we continue to show both the private sector and governments within the region that we can successfully deploy this capital and narrow the infrastructure gap. And also it's important that we can present to the other private investors within the region to show them that infrastructure is a good investment within the CEE.
Thank you, Joe. I see. Tom, would you like to wrap up, or you have some questions?
No, that doesn't mean we have to wrap up. That's not don't associate me with something bad happening. No, I'm just going to join you for a little bit.
I'm not saying something bad is going to happen.
Continue. I'm going to try to ask a couple of questions later, but continue on, please.
Yeah, sure. I mean, look, there is so much information, of course, that we would like to gather, and Joe was great, really, to explaining what's happening. I'm sure that each individual country will have its models and instruments how to steer up, create more projects. But I see you have a huge pipeline of projects. Can you share a little bit about other projects that are currently under review, or which projects are being, let's say, more attractive? We all know that digital is something that's maybe, so energy infrastructure is something that is definitely needed, road infrastructure, rail infrastructure, but digital projects are, of course, less covered, or there are less projects of let's say same quality, maybe. Can you elaborate a little bit about different approaches into different sectors?
Yeah, look, let me start with digital. I think digital is an area of significant opportunity for the 3Cs region. I think it's incredibly important. We have three main areas of interest around digital. One is data centers. I think it's very important that the data center market is developed in the CE region. And I think it's one of those areas where there's an opportunity for 3Cs region to leapfrog other parts of the developed world in some respects, because there's a little bit of a blank canvas there, but a lot of interest from major corporates, banks, governments, etc., to utilize data center infrastructure. So I think data centers are very important to the region, and we would like to use Greenergy as a platform to build data centers around the region. And we are in discussions in a number of countries. The second area is fiber optic networks, and there is a patchwork quilt of fiber optic networks in the region. And one of the areas of focus for us as a fund is to identify gaps in that fiber optic provision in the region, and to try and invest to build new fiber optic, particularly backbone fiber optic network in the region. So they're probably the two main areas of interest for the fund in digital. In energy, the main areas of focus are using Enery as our solar PV platform around the region. So I think, we were very pleased we made that investment a few weeks ago. And I think our plan is to deploy over approximately 250 million euros of equity in developing new solar PV in the region. But also there's a lot of interest around gas and gas generation, because the region has to move away from coal. There's significant coal generation. That means, I think, the use of gas as part of the energy mix is important, and part of that involves the construction of new combined cycle gas turbines that have low emissions or zero emissions through the use of carbon capture and the use of hydrogen. And part of it is all to do with ensuring that there's energy security around the supply of gas, which involves LNG and gas storage. And again, that is very important. So that's the areas. And then in transportation, I think obviously we have cargo unit. That's our rail investment. but we're also particularly interested in ports. I think ports are very important to the region, both Adriatic, Black Sea, and Baltic. And there are a number of port projects that we are looking at to either expand, modernize, or build new port infrastructure.
Fantastic. Really, really interesting. Tom?
Yeah, I just got a couple of quick questions for you, Joe. Great overview of the whole fund. You mentioned $1 trillion deficit from the infrastructure perspective, and you're talking about $1 billion funds. I mean, pretty big difference, pretty big, a lot of room between those two numbers. And if you guys want to have bigger impact, getting beyond, you've got U.S. or the U.S. is a big investor in the fund. Do you see Asian, like Japanese or Korean or Taiwanese? Do you see expanding the partnerships from the contribution to the fund?
So I think there's a couple of points to make. First of all, I think there's very significant public capital available as well. There's EU and government. So I think we're not the only solution. The second thing is that the fund, there's a leverage effect. Even at €1 billion, we would expect to have the investment from fund, including debt capital, would be a multiple of that, so 2 to 3 times that. So there is a multiplier from the leverage. The third thing is that what we also want to do is make sure we increase the size of the fund and show other investors that they can also invest and bring other private capital and other funds into the region. So there is no doubt that there is significant interest from the US, from Japan, Korea, and some other Asian countries in investing in the region, either through the fund or directly. I think that, I would say the market is moving towards us in terms of the attraction to investors of infrastructure in the CEE region. I mean, the fundamentals are there. There's high GDP growth. It's proven to be very resilient in the pandemic, and its recovery, I think, will be faster. And frankly, the reality is that where you're looking for returns, the returns in other markets are pretty low. So there is the opportunity to make a slightly better return in the CEE in the short term, at least. So I think the fundamentals are moving towards us, and I'm confident that significant private capital will be available over the coming years in the CEE, particularly in 3Cs.
Thank you.
So good afternoon. I'm Małgorzata Podrecka from CanPack. My company is doing cans for beverages. So it's rather far from the sectors that you've mentioned. But my question would be the following. If the company like ours would like to invest, for example, in onshore windmill, would it be something that what you would support, or that needs to be the public infrastructure projects, or what kind of projects are they in renewable energy? Thank you.
So thank you. In renewable energy, we have a pretty broad mandate. The projects don't have to be public. They can be private projects. In fact, the 3 investments we made are all private to date. And therefore, there's no restriction whether it's public or private. Our obligation is to make an equity return. This is a commercial fund, and therefore we will look at any project that meets the fund's criteria. So renewable energy meets the fund's criteria in terms of sector, and then it depends on, is it greenfield? Is it sizable enough? Is it the right technical solution? I think the short answer is yes.
I feel like I'm traveling back in time 25 years ago with the EBRD. You could be the EBRD speaking in 1995 with their fund. Yeah. Ask you this: do you feel that there's any possibility that you guys are sort of crowding out the more purely private? I mean, data centers, companies are investing in data centers, private equity, purely private. Do you feel is that a conversation that ever comes up internally among yourselves?
No, I think there's more. I think the reality is there's such a great need for infrastructure in the region that there just simply isn't enough capital at the moment. And if you take your example of data centers, I think it also depends on the markets. There's very significant investment by some of the big data center funds in Poland. I think one of the Goldman Sachs backed funds bought ATM late last year. So I think there's very significant interest, but there's very, very significant opportunity. So I think the answer to that is no, we're not crowding anyone out. There's a very significant demand.
Okay, and my last question would be from the perspective of the fund and other projects going forward. What do you want? Is there anything that you need or any partners you're looking for? I mean, if you had 5 points of either partners looking for or something that you guys need as a fund or the 3 Cs does, what type of partnerships or people do you want to approach you?
Okay, so I think the first one is obviously we're raising more capital, so we're looking for investors. Okay. The second thing is that we want people to approach us who have very high quality projects and management teams and plans, but need equity capital. So it's all about high quality teams with good projects. The third thing I think is we also, for those investors, we need partners who are customers. So for example, for data centers, we need large corporates who are going to use the data centers. For the renewable businesses, we need large corporates who want to sign long-term PPAs to get clean energy. So it's about the partnerships that our portfolio companies have. The fourth thing is, and I think we've got this, because of the establishment of the fund, we need good relations with governments throughout the region to work in partnership to ensure that the investments that they're making with public capital and the investments we're making are complementary. And that was my example on rail. And the fifth thing is we need to make sure that everyone is aware of what the fund is and what it does. So there's my 5 things.
Okay, and my last clarification, maybe you mentioned, I can't recall, real estate projects. I mean, in terms of large infrastructure redevelopment projects, we're actually sitting in one of them right now, Elektrownia Powiśle in Warsaw. But I can think of Krakow has the area, Nowa Huta has huge capital needs, and a major league 20, 30-year type of project. Do you touch real estate when it's infrastructure related?
So unfortunately, within the 3 Cs Initiative Investment Fund, the mandate is it does not include real estate or regeneration projects. As Amber, we manage regeneration funds in the UK, but within the 3 Cs region, I'm afraid that is not covered by the 3 Cs mandate.
Okay, I'm going to stop, leave it back to you, Natko, to wrap up, if you would. And you mentioned you had a perfect segue because Seaports is next. But Natko, I'll leave it to you to wrap up and last comments.
Thank you, Tom. I mean, Joe's presentation was really, really exciting. I think it shows the plethora of opportunities around the region. Me as a Croat, and I've been following the 3 Cs initiative personally from the day one with the first Dubrovnik meeting, 7-8 years ago now. I think this initiative has expanded tremendously now, and it's going to create great opportunities and bring more and more investment. What I see as a challenging part, of course, it's working together with private and public sector, and I'm sure with the greater insight the people who are managing the fund gain from with governments and private sector players, that there will be more success. So these 3 projects that you have already realized are just the beginning, and with LNG, with energy, with the digital sectors being in the focus, I think this really creates a lot of opportunities in the region. And of course, governments are using the EU funds a lot. The EU with its financing arms it's also an important player, of course, for each national government in the region here, because we are all EU member states here, right? But certainly this type of thinking, which is a commercial thinking, it's different and it's needed. So I really commend the initiative and you, Tom, for organizing this conference. It's important to keep the dialogue open, and I would like to see Joe also personally here in Croatia and in other countries in the region. So thanks a lot.
Thank you.
Thank you guys very much, Joe. Natko, thank you very, very much. Appreciate it very much. Round of applause here in the audience for these guys. I don't know if you can hear that or not.